Ladies and gentlemen, good day and welcome to the IG Petrochemicals Ltd Q1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. Please note this conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Pramod Bhandari, CFO from IG Petrochemicals Ltd. Thank you, and over to you, sir.
Hi, good afternoon, everyone. Thank you for joining us today. On the behalf of IG Petrochemical, we extend a warm welcome. We are also joined by SG, our investor relation advisor. I trust that you all had an opportunity to review our financial results and investor presentation, which is available on the stock exchange as well as the company's website. We will begin with a brief overview of recent industry development, IGPL progress in relation to our new projects, and followed by operational financial highlights. Over the last few quarters, the global chemical industry has navigated a difficult environment with the challenges such as the volatile crude price, rising trade costs, subdued demand from Western market for key chemicals. Many leading Indian chemical manufacturers, especially those with the high export dependence and commodity product portfolio, or reliance on the raw material from Western side, say Europe, China, has significantly impacted. The uncertainty around the US tariff has also been added to the pressure on this sector. At IGPL, we are still, while these external headwinds didn't directly affect our core operation, given the majority of our product we are selling in domestic market or within the radius of 200 to 300, and few portions, 10 to 15% we are selling in the export market. However, certain downstream industries we cater to did have experience of some slowdown. Additionally, our performance this quarter was impacted by rupee depreciation and compressed margin. That said, that IGPL stands on a strong foundation, renowned for our operational efficiency. We are one of the lowest cost producer and largest producer of phthalic in India, second largest producer in the world. Over the years, we have built a reputation of excellence in the producing high quality phthalic anhydride and a versatile product used across multiple end industries like paint, plasticizers, pigments, polymers, coatings. The domestic demand for the phthalic anhydride is expected to be around 5 lakh to 5 lakh 50,000 tons, and which is currently growing at between 5 to 6% per annum. With commissioning of PFI plant, the total capacity of IGPL today for phthalic stands at 2 lakh 75,000 tons. As a part of diversification, as discussed earlier, we have committed 165 crore to set up a greenfield plasticizer project with a capacity of around 75,000 tons, which can be extended to 1 lakh tons. This facility will produce a range of plasticizers including DOP, DINP, DPP, DIBT, and will internally consume, which resulted into internally consumption of 30 to 35,000 tons of phthalic. We expect that plant to commission by December 2025. We are also taking meaningful steps towards a sustainable energy economy and setting up the compressed biogas and the pyrolysis plant in Raichur, Karnataka. The CBG plant is currently under implementation, while pyrolysis is just in a process to getting the construction started. The capex of the pyrolysis plant is around 16 crore, which will convert most type of plastics available in the market into the fuel oil through the chemical recycling. In parallel, we are improving our operating efficiency and reducing our carbon footprint by integrating the solar power and other renewable energy solutions in our existing facility. We have also initiated the phased replacement of conventional fuel through which is the LSFO and diesel with the natural gas at our existing plant. Looking ahead, with these strategic initiatives, our expansion into the plasticizer, foray into the green chemistry and sustainable driven investments will open up new growth avenues, build new capacity, and deepen our customer relationship. Combined with our proven operational excellence, they will put IGPL in a scalable long-term growth trajectory. Now, coming to our financial performance, the total revenue stood at 481 crore compared to 594 crore, mainly due to the lower productions and the sales. Revenue contribution for the non-Phthalic business stood at in the current quarter Q1 FY26 at 35 crore. Gross profit was at 102 crore. EBITDA was 13 crore. Our profitability for the quarter was largely impacted because of the 18 crore provision of M2M on our euro loan, which was 15.3 crore included in the other expenses, and 2.6 crore, 8 crore was the part of financial charges. And then there was some overall compression in the margin that has affected the overall financial performance. With this, I will conclude my presentation and open the floor for the question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Ketan from SMIFS Institutional Equities. Please go ahead.
Yes, sir, just a couple of questions. Sir, during the quarter, I believe the volumes are lower. Any particular reason, sir? Like, I believe last quarter also there was a shutdown, and this quarter also the volumes optically look lower. Any reason, sir?
So there was some planned and some unplanned shutdown in our existing plant facility that has resulted into the overall lower production, which was, I think, around 45 or less than 45,000 tons. And similarly, the sales was also in similar quantity. So typically, we are expecting between slightly more than 50 on per quarter basis, but this time it was 10% lower.
Got it. So this compression in gross margin is a function of lower volumes coupled with lower spread.
So two things, yeah. First, the volume was typically has to be around 50,000, which was 10% lower. And second, there was a compression in margin. And third, which is the EBITDA, mainly impacted because of 18 crore or 18.5 crore of provision of M2M. As you know that most of our debt, which is around 22.5 million, is in euro, and euro has moved from 92 to 98. So which has resulted that we need to provide the M2M provision in our financial statement for the quarter ended June 26.
Got it. Sir, this M2M which we are talking, I believe you had mentioned that it is a euro loan. And sir, like every now couple of quarters, like this number of M2M is coming. So do you attribute this as a one-off, or it would be a recurring number which would come every now and then as per the currency movement?
I think we as a management had decided to dilute probably 50, 60 or 70% of our debt from euro to the rupee currency, because now the rate in rupee is also reasonable. And being global uncertainty, you never know what type of moment between dollar, euro and rupee will happen. So we will be subsidized in probably next month more than 60% of our loan from euro to Indian rupee.
Got it.
You will not see going forward. Going forward, you will not see that much price.
Got it. Okay. Sir, into the annual report when we checked, so this euro loan figure was somewhere around 230 crore as a total loan, out of which, sir, 50 crore was a payable. So this M2M which is coming, it is on this complete amount, this 230 crore?
So let me complete. The total debt amount is around 227 crore. Out of that, the net in the balance sheet, because we have prepaid certain debt of one of the lenders, 35 crore. So net, if you ask me, the total debt in the balance sheet on the June was 197 crore, which includes, I think, except one loan, most of that was in euro. And I think out of 22 million, we will be 10 to 15 million, we will be able to convert in next 1 month. Okay.
Got it. Okay. Sir, onto the operational part, as I believe so plastics as a plant is now delayed by 3 months from the earlier plan. Any, sir, clue onto the numbers, how we are looking at the revenue, EBITDA and bottom line for 26?
Earlier we thought plasticizer will be starting the trial run in August and September, but because of some delay in the approval from the statutory authority, it will be starting it now. It will be having a commissioning the operation by December. It is 2 to 3 months, but in a big project like that, 2 to 3 months is normal. It's subject to the various approvals which you need to get. We plan that I think it will be ramped up in April, Jan, Feb, March. You will be able to see a good amount of utilization beginning from April 26 onwards. The overall revenue at a peak capacity will be around 1,000 crore based on the today's price of the various plasticizers which we are planning to produce. At that level, margin is expected between I'm talking about the gross margin between 10 to 12%. When I'm saying margin 10 to 12%, it imply and indicate that we will be transferring the phthalic anhydride at the market price.
Got it. Got it. Sir, just one last question. So compared to Q1, like current spreads, are they better like compared to the historical average, or are they in similar lines? And sir, what number are we looking for FY26 in EBITDA?
So I will not like to comment on EBITDA specifically. It is whatever is the market margin, we will be having $100 to $120 above. I believe from next quarter onwards, we will see 50,000 plus volume every quarter. And I think because of the compression in the overall production for the last one quarter, which is the Q1, our target for the yearly will be between 205,000 to 210,000. When I'm saying 210, 5 to 6,000 will be internal consumption, and around 200,000 to 205,000 tons will be the annual sales volume for the phthalic.
And sir, onto the spreads part commentary, current spreads, how are they like?
The spread right now has improved. It was around 100 to 110 for the last quarter. It has improved between 120 to 150. But spreads are moving between 100 and 150 for quite some time, and there is a moment of $20, $30 every quarter. So it's very difficult to pinpoint. But these are the bottom out. It can't go below 100. If it go, it has to come back, because then for most of the plants, it will be unviable to produce.
Got it. Thank you, sir.
Thank you.
Thank you, sir. The next question is from the line of Riya Mehta from Equitas. Please go ahead.
Thank you so much for the opportunity. Also, my first question is in regards to the spreads. So, I think last quarter we said that it was around 150 to 200. So, what I am guessing is now from 150 to 200, we have something around 100 to 150.
So, typically, it's a function of the overall demand supply scenario in the international market. While the domestic demand continues to remain same, which is a robust, and we are selling most of our product 90% in domestic market, 10% is generally exported. But for IG specifically, first the margin was between 110 to $120. The second, the volume was low, and third, because of the M2M provision we have taken, that has resulted into the compression in the margin. Otherwise, it's a function of demand supply in the international market. When I'm saying 100 to 120, it is the margin in international market, not for the IG.
Right. And so my question was more in terms of on a sequential basis, it has fallen from around the ballpark 170 to 125.
Yeah.
Got it. My second question is in terms of that if we are guiding for 25 to 210, then on a quarterly basis, we will be doing more than 55,000?
So when I'm guiding for 25 to 210, that means we will be having a 210,000 ton production. 5 to 6,000 tons will go for internal consumption, and around 50 plus for the next 3 quarters, every quarter.
Also, we had taken a shutdown in Q4 only. So what happened? Because I think in Q4 we are pretty confident that there will be no shutdown this year. So what happened in Q1?
Q1 there was some unplanned shutdown and the plant shutdown. which we have taken because we are integrating our existing natural gas, because we are planning to replace the fuel, LSFO and diesel with the natural gas. So there was some integration of that pipeline happen in one of the plants. Then we need to take some certain shutdown. We are planning to replace the existing fossil fuel, 80% of existing fossil fuel with the natural gas, which will save 5 to 6 crores on an annualized basis. So that was the reason. There are a lot of technical things, but main reason was the integration of the pipeline.
So it will say 5 to 6 crores in other expense this year annually for us?
No, not for this year. It gradually go up in this year, but 26, 27, you will see the saving of 5 to 6 crores because the LSFO and the diesel will be replaced at all the points with natural gas.
Alright. And what number of days was the plant shut?
Plant was shut around 20 to 22 days.
20 to 22 days. And in terms of demand, how are situations standing out? Because of what I read globally also, we are looking at a little, the kind of growth has been a little subdued.
So if you ask me as such, in domestic market, I have not seen any impact. We are able to sell the similar type of product which we were selling historically into the domestic market. When I'm saying domestic market, it includes the domestic players, the SEZ player and the UAE player. However, there are some light concerns, or you can say the demand, which I have seen because of the US uncertainty in the duties. As such, IG doesn't have any direct impact because we don't sell to Europe and US market. We sell to Indian market and generally Middle East and Turkey, Middle East, UAE and Turkey market. But some of the domestic players who are selling outside India, say in Europe, China, they are right now in an uncertain phase because there is no clarity in terms of the what duty. And even today, when the Trump has announced the duty, the product price duty has not been announced. So it will be a product. In chemical also there are 300 products. Certain chemical, like in pharma, out of 300, 280 was exempted because they believe that is the essential need. So similarly, in chemical also they need to come back with the list. What are the products are exempted? What are the products they need to have a duty? So that uncertainty actually may impact some downstream because I think some of the UPR and the pigments are going to Europe and US particularly. Otherwise, in terms of Indian demand, I don't see any problem for the phthalic per se. And other areas like paints, plasticizers, CPC, they all are growing very well.
Okay, so paints and plasticizers, which form almost around 40 to 50% of our revenues, we don't see any much impact there, right?
Not exactly. I will tell you the percentage wise, the paint is around 15 to 20 to 25%. And then plasticizer and the UPR and especially chemical around 20 to 25%. And balance is the CPC segment, which is also 20 to 25%. All three segments comprises around 70 to 75%. Balance are all other segments. So as such, in some season, some of the players, say plasticizer in the rainy season, demand will be low. Paint will be low, plasticizer will be high. In another season, the paint, there is equilibrium because every seasonal, some demand is going up, some size is subdued. So accordingly, overall, I don't see any overall impact in the domestic market. In fact, if you ask me, July, August, September is very good in terms of demand.
Right.
Indian demand is intact. In global market, we need to see how it pan out in next 1 or 2 months.
Right. Also, our peers have also reported losses. So I suppose this was on account of reduction in crude prices. And do we see the spreads increasing from around 100, 120 to say 150?
I think spread is already coming up. Next quarter, I expect it has to be between 120 to 150. I think I'm not worried about that much about the spread because overall, it has to come above 150 because generally for most of the players, below 150, it will not make commercial sense to produce. IG, because of operational efficiency, byproduct are able to do that. But in general, it has to be above 150 and between average has to be around 200.
Are you seeing any cut down of production capacity by your peers because of loss making at these spread levels?
So production capacity, I don't think, because India has a demand of 5 lakh ton, 5 to 550. IG produce right now around 2 lakh ton, and other players also provide around 150 to 180, and then one player is also producing around 70, 80, which goes mainly for the consumption. Even at that, India is importing. If you look at the overall import in India, it is 16,400 ton last quarter. That means still India is importing 50 to 60,000 ton every year. So demand in India is impacted. Yeah, demand in India is not impacted. However, if we are not able to produce at optimal capacity, import will happen in India.
Exactly. So my point was, at the current spread levels, when the domestic players, apart from IG, who has a operational efficiency, are making losses, do we see them taking similar production cuts or maintenance shutdown earlier to, reduce the volume?
So let me correct. IG is not making losses because of operation. It is because of it's because of 18 crore MPM. That also we are correcting in next probably 1 month. Next 1 month you will not find after that there is any MPM charges.
Right.
Because of global uncertainty. I don't want to comment on the peers. I am talking about IG. Of course, the margins are compressed, but even at that margin we can make good money. If we have a good volume, if our 5 plants are operating, which we expect from September, October it will be, 5 plants are operating at similar margin, we will make around annualized 100 crore plus that. Current margin, which is the lowest point. We expect margin to improve, then our profitability will also improve accordingly.
Of course. I was talking in terms of if we're seeing a consolidation in the industry with the supply going down.
I think already there are 3 players only. There is no other player. So I think industry is already consolidated in that sense.
Fair. I'll get back to you for further questions. Thank you so much.
Thank you, ma'am. The next question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah. Hi, sir. Thank you for taking my question. One is on the other expenses, as you mentioned that there is M2M adjustment. Apart from that, I think power cost is also in our other expenses. So how much was the power cost last quarter and in this quarter, if you can mention?
So I will give you energy cost. I don't have a separate breakup of the power cost. Energy cost for the last quarter was 16 crore. This quarter it was 17 crore.
So this increase, since as you have mentioned that plant was shut down, and
that is not having direct impact because it's a link with the LSFO and this, and the shutdown has no direct impact on the energy cost because it remains in the range of 60 to 61 crore annualized basis for last so many quarters.
Okay.
It had an impact on repair and maintenance last quarter when it was 12. Now today, in current quarter it was 6 to 7 crore, which is in line.
Okay, got it. And on this power side only or energy cost only, any plan to reduce this in terms of adding renewable source or something to cut down the power cost, because ultimately.
So there are 2 points. First, whatever is the power consumption, I think 75 to 80% is the in-house waste energy which is used. So 10 to 20% power is the external, which is the government power, use of LSFO and the diesel, which we are using, and that is the cost in which you are seeing it. Now, from that also we are started the solar power long back 2 years. 2 years back we started the solar power plant, of course for a small quantity. Now we are increasing that capacity. Second, we are inducting the natural gas in all the plants, which has started for the last quarter, and probably next 1 year you will see the ramp up. So the cost of energy which is coming today around 60 crore, you will see a saving of around 10% or slightly higher than that because the replacement of natural gas with the LSFO.
Okay, got it. And secondly, on the overall profitability side, I mean, I was just looking at the quarterly trend, what we are making around I mean, if we make 50,000 plus kind of volume, and with a decent spread, we end up somewhere around 40-45 crore kind of EBITDA. This quarter, if
Correct.
we add back that 18 crore adjustment, we would be in that similar range. But going forward, I mean, in case I mean, we are not able to achieve these 40 crore kind of run rate in the EBITDA front, are we in a position to look for the CapEx plan which we have planned for all these plasticizer or compressed gas thing? Would there be any increase in the debt side further in case? I mean, I was just looking at the capital requirement, maybe if we are not achieving to that kind of profitability angle.
I think I'm not worried about that because profitability, if you remove the M2M charges for the time being, overall company is making a cash flow for the last, like, let me give you an example of last year. Last year, the PAT was 112 and depreciation was 65 crore. So we have made around cash flow of 170 to 180 crore last year. We expect this year it has to be better, but it all depends upon how we wrap up the capacity of plasticizer and how we are operating our plants. Plants are world class. Demand is there in the market for 70-80% of our product. 20% is the export, or eventually in October it will go to plasticizer. If we operate at a full capacity, I'm talking about all 5 plants, including plasticizer, we will be having a revenue between 3,200 to 3,300 crore. At that level, even if say conservatively, our EBITDA move between 12 to 18% or 20%. Even at 12%, it will have a 400 crore of EBITDA. Or even if you take 10%, it has 320 crore EBITDA. So the challenge is happening is 3 front. When you are saying and looking at this particular quarter, first the margin was compressed. The second point was the malic prices is also continue to remain low, 830 to 840, which is supposed to be 1,000 plus. Third point, the volume was lower. And fourth, which is most important point, is all the expenditure of 5 plants, like depreciation, 16 crore is for the 5 plants. It is there. All expenditures, like employee expenditures, the repair maintenance expenditure, all expenditures are put for 5 plants, right? We are operating less than 4. So that has also impacted the profitability. If volume improve and margins slightly improve, everything will be fine in terms of profitability.
Got it.
Yeah.
Got it. Okay, so and just 3,000 to 3,200 top line which you are talking about. So this is when we are operating full for our 5 plant and plasticizer, which I think would be in 28 because plasticizer would be also be
26, 27, not 28, 26, 27.
Okay. So FY 27 still we are holding on to that 3,000 plus top line.
Yeah. It will be 3,000 plus. Otherwise, the plasticizer will not be operating. You need to operate 5 plants consistently to feed to 70% of feedstock requirement of plasticizer.
Got it. That's it from my side, sir. Thank you and all the best.
Thank you.
Thank you, sir. The next question is from the line of Renuka from First Water Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. So, just on the other expense side again, if I see on a year-on-year basis, it has increased by about 20 crores. So, like Q1 FY 25, it was 47, which has gone to 68 this quarter. So, 15 crores is attributable to the mark-to-market loss. What is the balance? And given the fact that this cost will not be there going forward, plus we have power cost saving, so will this run rate go back to the 45 crores quarterly?
So typically it is 45 crore only. Even for this quarter particularly, the repair and maintenance, I will give you the breakup. Employee cost last quarter was 26 crore. This quarter it was 24 crore. Energy cost last quarter was 16 crore, this quarter was 17 crore. Repair and maintenance cost last quarter was 12 crore, this quarter 7 crore. Sales cost is 11 crore, 10 crore. The only changes happen in the foreign exchange. Because foreign exchange in the last quarter, 6.65, this quarter is a 15.31 crore as an M2M we have provided in the other expenditure, and the 2.65 crore is on the interest expenses. So the expenses of other expenses which you are looking at, which include the M2M, that's why it looks slightly off, out of way. Otherwise, generally all expenditures are similar. There is no change, except the last quarter when the repair maintenance was higher. Because typically 7 to 8 crore was a quarterly run rate, last quarter was 12. So everything is in line. I think M2M, which we are targeting to sort out in next one quarter, probably next quarter onwards, you will not see the wild changes because of this M2M charges.
Okay. And just on the CBG plant and other expansions, if you can just give some detail as to how much CapEx and revenue we are projecting once they commission.
So CBG, we are expending around 30 to 32 crore, net of GST around 29 crore. CBG, the construction is already started. It is expected to complete by April 2026. It is expected to generate around 1-to-1 revenue, like 30 to 33 crore will be the revenue, 30 to 32 crore. And in all the projects which we are undertaking, our criteria is IRR has to be more than 15%. In this case also, it has to be more than that. In CBG, I think we have already signed up with the supplier of the raw material to produce and give us the supply. And in terms of the final product, it is a buyback arrangement by the government company, SPBP, IOC, and GAIL, this type of companies. So that will add, typically in terms of revenue, around 30 crore. In paralysis project, I have completed the basic and detailed engineering, which is undergoing for last 2 months. Probably in next month, September onwards, we will start the construction. It is also expected to complete in a similar line with the April 2026. So April 26, say June, which is the ramping up. From July onwards, you can see a addition of revenue of between 40 to 45 crore on account of the CBG and paralysis. In the paralysis project, various types of plasticizers are converted into the methane gases, and they are converted into the fuel oil, which will be sold into the industry. It is basically the green venture to enter into the green side. We see a lot of opportunity and growth going forward in the CBG project. This is the first trial project which we are setting up. Once this is set up, we are having a plan to set up another 4 to 5.
Got it. So just to sum up, from CBG and paralysis, top line, you're expecting 40 to 45 crores.
Correct. On full year annualized basis.
Right. And how much will that add in the bottom line?
Bottom line, it will be adding between 8 to 10%. So right now, I will not commit, but you can assume it will be between 5 to 6 crore.
Okay. Thank you, sir. That's all from my side. I'll join back the queue.
Thank you.
Thank you, ma'am. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference call, please limit your question to 2 per participant. The next question is from the line of Yash Nayak from Kamakya Wealth Management Private Limited. Please go ahead.
Yeah, thank you for the opportunity. So what is the current level of PAN input, and have recent capacity addition by the competitor resulted in the oversupply situation in the market?
Typically, the PAN is imported in India between, on a quarterly basis, around 13 to 15,000 tons. The last quarter also, there was an import of similar nature, and that is happening continuously post starting of the new production facility by another competitor. So you need to understand that generally India has the duty, anti-dumping duty, and the basic custom duty, and we have BIS standards so as to enable to not to allow the non-compliant helic anhydride into the country, which is injurious for the health. But there are certain leeways given by the government in terms if you are 100% EOU, you can buy the product and sell it. You don't need to comply with the duty and you don't need to comply with the BIS standard. In that case, the 100% EU guys prefer to buy in case there is an opportunity from the international market. So even if India is self-sufficient or slightly higher than capacity than the Indian demand, still there will be a overall import in the Indian market because some of the players still feel that they need to import. Of course, they carry the risk of forex, freight, insurance, logistics, transportation, others, but still they import. So India for import, you can assume it 50 to 60,000 tons will import will there. When you assuming import, you need to also consider that IG also export around 10 to 15% of their product. So net export from India and import from India, that will become zero.
Okay. Got it. And sir, with the ortho-xylene spread under the pressure and main prices about 20% YOY lower, how do you see the spread trending in the next couple of quarters?
So the gross margin for the last quarter was 27%. This quarter it was 19%. So there is a direct erosion of around 7 to 8% on the gross margin. The main reason was the decline in the margin. It's the overall international market where the margin is driven by the demand and supply. And I think it has also been impacted because of the uncertainty in the global market because of the tariffs and other things. China put some duty on the downstream segment. The Europe was in trouble around 1 year back because of the gas prices. Then US is now playing the different tactics. So I think we need to wait probably 1 or 2 quarters before we see the good uptick in the market margin. Because margin is basically the factor of demand supply, and that will be settled when there is a stability in the global market. Continuous fight is going on. Now tariff war is going on. So all the players who are into the downstream productions or the production of various chemical and chemistry, the mindset, the production process, as well as the incremental production to supply expansion, everything got impacted because of these uncertainties in the market.
Yeah, that's it from my end. If I have any, I will join back the queue.
Sure.
Thank you, sir. The next question is from the line of Chirag Vaikaria from Budhrani Finance. Please go ahead.
Yes. Good afternoon, sir.
Good afternoon, Chirag.
So wanted to I missed that number. Current spread is at what level, sir?
Between $100 to $120 in the market.
So secondly, on the debt that you have said, sir, you are saying that you have around 227 crore debt, right?
Correct.
But sir, this and how much is foreign debt?
Foreign debt is 188 crore.
And from this, how much are you converting it to the rupee denominator?
I think first target is 100 crore.
Okay.
And then 50 crore.
This will happen in this financial year, FY26?
Yeah. I think 50% will be by September and then by December.
Okay, so 150 will get converted, right?
Between 130 to 140.
130 to 140.
Because balance one debt is very cheap, which is 0.7% or 1.1% under ECA facility, which we don't want to convert it.
Okay.
But we will have some protection in terms of the hedging for that debt also. But right now, all the debt which we have in euro, we are trying to convert.
So this pressure on spread, what do you attribute this to in this quarter?
First, geopolitical global uncertainty, because global demand has to be stabilized for that, because whatever is the global margin we get, $100, $120 over and above. So I think the Ukraine war, US policy for this, plus China retaliations against that, plus Indian and US relationship, everything together. So many uncertainties are going on that has impacted the overall demand supply, which I believe has now improved. July, August, I have seen better improvement. Even in domestic market, demand is much better in July, August, September. So I think we need to wait for 3 to 6 months before the global market settles on that side.
And any thoughts, any dumping happening?
Dumping, I will not say, but some of the players continue to import because you don't need to have BIS standards and other follow. So you can import under the scheme, and there you need to export your product. So the duty or the BIS standard is not applicable for certain players.
Okay, sir. Okay. Thank you.
Thank you, sir. The next question is from the line of Shiv Patel from Coop Investment. Please go ahead.
Hi, sir. I'm audible?
Yeah.
Yes, sir.
Sir, my question on plasticizers, right? Does your plasticizer plant produce only the 4 plasticizer you mentioned, or it is flexible to produce other plasticizer as well?
So, I have not got your question. Can you please repeat it?
Okay. Sir, my question on plasticizer side. Does your plasticizer plant produce only 4 plasticizers you mentioned, or it is flexible to produce other plasticizer as well?
It is flexible to produce other plasticizers as well.
Yes. Means it can produce other plasticizers, yes?
Yeah. I have just given you top 4. It is actually 7, 8.
Okay. And
out of that, DP we are already producing for last 2 years.
And are you looking to expand your plasticizer portfolio beyond current 4 you mentioned in coming years?
I think that I will not be able to comment it right now. Let first plasticizer start, then we will discuss about it.
Okay. And sir, is there any oversupply in market because of one of...
Sir?
Okay.
Yes.
May we request that you return to the question queue for follow-up?
Okay.
Yeah. Thank you, sir. The next question is from the line of Chirag from Keynote Capitals. Please go ahead.
Yes. Thank you for the opportunity. Most of my questions are answered. Just one question, Pramod sir, that we have almost 1.5 months in the Q2 down. What kind of spreads are we looking at currently? Is it 100, 120 only?
Yeah, 120 to 150.
Okay. So second thing I wanted to understand, generally when we reach a spread of 100, we have seen internationally multiple plants have shut down. This was the case in FY24 too. Is it the case? Is it the case that is happening right now also? Are we seeing any shutdown taking place?
Right now, I think it is not because of that, but also because of a lot of geopolitical issues. Already plants are operating at a lower capacity. So they are operating at lower capacity. The overall demand scenario has impacted because so many geopolitical. Some downstream industries are impacted because uncertainty in the duties. So as such, we have not heard anything about the shutdown of plant. Of course, there is a repair maintenance and all that is going on. As usual, somebody extended that, but you will never know why it is extended. So that may be the reason. As such, we have not seen, because right now it has gone to 120. Now it is again gearing up for the 120 to 150.
Fair enough. And so are we expecting any catalyst change in the next couple of quarters?
So I think every year we will have 1 or 2. This year we already had it. For the next year we need to plan it out. Right now company has not planned that. So technical team will plan. Generally in a year we will have 2. Because we have 5 plants and every 3 years need to change the catalyst. So every year we will have 2 shutdowns, assume.
Right. Perfect. And so last question from my side, that the kind of guidance that you have given about 3,000 crores plus top line, are this on current phthalic nitride prices or it is on a normalized levels?
No. At current market price of phthalic, we are expected to have a 2,200 crore of revenue, which is there at last year, if you operate 4 plants. If you add 5 plants, then you have a revenue of 2,700 crore, which is 500 crore added. Plus, if you add the plasticizer of the 950 crore, out of that you need to reduce the phthalic of 450 crore, then 500 crore net will be added on plasticizer. So that's why I say that if we operate 5 plants, including plasticizer, we will have a revenue between 3,000 to 3,200 crore.
Fair enough. With the kind of catalyst change and the kind of prices which are
in line with the current market price.
Perfect. That is it from my side. Thank you so much, sir.
Thank you.
Thank you, sir. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Sir, thank you for the opportunity. Sir, some of the database that we follow, sir, there has been a 10-15% decline in phthalic prices in China. So is this true? And sir, it seems that the ortho-oxylene prices are stagnant, but phthalic prices have declined by 10-15%. Sir, so would that mean that the spreads are going to increase even, decline even further?
That is the reason the margin got impacted. The last quarter, the gross margin was 27%. This quarter it is 19.2%. So 7 to 8% is a direct impact on the margin because of the raw material prices and the phthalic price.
And sir, is that is that also the case for this quarter? Because it seems that prices have declined from 7,000 RMB to 6,200 RMB.
Right now, the prices in the market is going between $90 to $93 for phthalic, and around 80 to 81 is the ortho-xylene. So right now, there is a slightly improvement compared to the last quarter, and that I'm talking about only July and half of the August. And balance, I think next 45 days will decide what will the overall margin. If it remains same, it will be better off than the last quarter, current quarter.
Got it, sir. Sir, my next question was on the plasticizer. Sir, would we be the lowest cost producer of plasticizer once we begin our production versus KLJ and other competitors?
So I will not say the lowest cost producer because we are setting up only the small capacity of 75,000 tons. We will have some inherent advantage because we are producing phthalic. And in that case, the pricing of the phthalic will be comparatively lower because you don't need to pack, you don't need to transport it. So that advantage will be there. But I will not say that we are lowest cost producer because KLJ also has their in-house phthalic. But we will be very competitive.
Got it. And sir, this would have a 5 to 10% net margin, incremental net margin on the 500 crore, that additional revenue that we'll get, right?
That gross is 10 to 12 and net we are planning it move between 3 to 10%. So you never know. But right now it is between 5 to 6. So margin keep on changing. Some products have 7, 8%, some have 12, 13%. It depends upon which product you are producing and what is the margin at that point of time.
Got it, sir. So that was from my sir. Thank you so much and all the best.
Thank you.
Thank you, sir. The next question is from the line of Amit Mendale from Robo Capital. Please go ahead.
Thank you. Thanks for the opportunity. So my first question is on the plasticizer plant. Do we see that Q1 of next year, which is Q1 26, we'll have the plant scaled up fully so that it does about 900,000 crore the expected revenue that we have. We'll start from Q1 itself.
So, as mentioned last quarter also, December we are planning to commission, then it will be trial run for probably 2 to 3 months. Then we start the production. So we don't expect to reach 100%, but we will be between 50 to 60% for sure for the 26-27.
What revenue? Yeah. So what revenue are we? Is it?
No reason. Because once you start the commercial production, you ramp up quarter to quarter basis. It may be 100%, it may be 90%, but generally the guidance we given is 50 to 60% in the first year of production. Generally, all plants, if you look at, they start with 50, 60, then they reach 70, 80, and then they reach 90, 95.
Correct.
You may overreach, but for the purpose of guidance, we are remain in line with what industry standard is.
Right, sure, sir. And the next question, net debt. What would be the net debt adjusting for cash?
Net debt is 0 because the cash on the balance sheet was around 300. Right now it's 270, which will be further added by 20-30 crore very soon. It is net debt is 0 because debt is 227, which is further prepaid, and now right now is 197 against the cash of 250 to 270.
And the last question is on the imports. So for the imported products, versus our, what will be the difference in the pricing?
So as such, no difference in the pricing, except the freight transportation and the duty, if it at all levied, which is the only difference, 2 to 3%. Otherwise, it's the competitive market price, and generally our pricing for most of the customers are in line with the imported parity.
Okay, sir. That's it. Thank you very much.
Thank you.
Thank you, sir. Ladies and gentlemen, due to interest of time, that was the last question for today. I now hand the conference over to Pramod sir for closing comments.
Thank you very much, everyone, for joining the call. We appreciate your time and showing interest in our company. In case you have any other questions, please contact SG, our investor relations advisor. You can send the mail to us. Thank you. Thank you very much.
Thank you, sir. On behalf of IG Petrochemicals Ltd, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.